Greetings, class. I've created an Excel worksheet for you to use to do your week 4 individual assignment, which is to create pro forma financial statements, an income statement and a balance sheet for a particular company based on a sales initiative that you are going to establish in the company. That sales initiative is going to increase sales, and as a result of that change in sales, it's going to have an impact on expenses and also on balance sheet items. So what I've done here is to create a spreadsheet so that you can forecast or create your pro forma without all the great difficulties of trying to figure out how you actually could physically do it. And you're free to use this spreadsheet or not. Essentially, if you use a spreadsheet, you need to fill in areas that are shown in yellow. Everything else is calculated for you. So, for example, all of this area down here in the income statement is already calculated. Don't worry about that. And in the balance sheet, the stockholders' equity section is basically calculated for you. So, in essence, you start by defining your initiative and writing that down in your paper, and then discussing what % sales increase you're going to have and why. And you put that % sales increase in here. In this case, I have 6%, but if I want to change it to 9%, I type in 0.09, and voila, sorry, 0.09, and that changes the forecast for that particular year. You can also change these numbers here to bring in whatever the sales is that you think is going to happen. And if it's all 9%, just make all these 9% or 10, whatever the number is. Once you enter that number in, the cost of goods sold and gross profit is determined because that is always going to vary essentially with sales and with net sales. So I didn't see any need for you to have to just merely copy that over, so I did it for you. What you need to do is to fill in what you think the wages and salaries are going to be, and the selling expense, which sometimes varies with sales or net sales, and also operating expenses, some of which might vary with net sales and some of which won't. And you need to put those numbers in here. If you know how to use Excel, you can, and something, for example, is driven off of net sales. In this case, I'm suggesting that maybe, let's pick, just for fun, telephone. Let's pick office supplies, driven off of net sales. So office supplies are now $500. What will they be next year? In our forecast, it equals $500. That line times, and parentheses, 1 plus that number, or 1 times, actually 1 plus that number, which is 9%. So it would be 109, and that's $545. And you could do the same thing in the next year. This year, for example, would be equal to this number times, again, and whoops, 1 plus and this number here, and that would be 567. And then if it's going to be the same for every year out, you could put that in here, and you could do that for the other ones too. It's just that you have to project it, but the point is you need to do the projection. Once you project these things, then you are going to come up with a net profit because it'll calculate it for you. What's most important is that you write your assumption down for each one of these projections. Write it down. Write it down so I'll know what it is, and I'll know how you made, what assumptions you made. When you do the balance sheet, the information from the net profit is tied into the balance sheet, so it'll automatically increase your shareholders' equity. And I am going to instruct you not to worry about any changes in equity other than that, so I fixed that for you. But you do need to project what you think you're going to need for cash, and what your accounts receivables are going to be, and what your inventory is going to be, and your prepaid expenses. And I've given you some suggestions over here on the left on how you might do that. And I've done it for all the items. So if you put those items into these boxes, it'll change. You'll wind up with numbers here. This should be total current assets, although it doesn't say it. I think it's total current assets. And it should be the same on the other side. And I've simplified the fixed assets section, which probably isn't going to change except for reducing by the amount of depreciation, which is up here. You'll have to put that in unless your initiative requires you to buy equipment, in which case you want to add equipment in as a cost. You'll have to project your current liabilities. In this case, it's revolving lines of credit, and which is currently at $20,000. If you're going to need more credit, you need more cash, you're going to use that line item to add into that, add more of that, and accounts payable and so on. Essentially, when you get done, your balance sheet has to balance. So total liabilities and equity has to equal total assets. And the way you make it balance is you either have to have reduce, in your case, reduce cash or increase your borrowings. Either increase the borrowing here or increase your long-term debt over here. So that's the way you use the spreadsheet. I wish you good luck with it. And again, you are free not to use it, but if you do use it, enjoy. And let me know if there's any problems with it.